Um, Good morning and welcome to the ORS Workshop for Money Advisors. This session is in relation to the most frequent questions asked regarding assets in the bankruptcy process. It is presented by examiners who work in the Official Receiver's Office. Firstly, there will be an overview of assets by myself, then a presentation on family homes by Laura, and finally a presentation on income payment agreements and orders by Bash. At the end of each topic, the presenter will take questions, so please feel free to put questions in the Q&A box. Could I please have the slides? Okay. My name is Beverly Corner and I'm an insolvency examiner in the Official Receiver's Office. I'm going to talk about assets generally, including motor vehicles. Next slide, please. This slide looks at what is an asset. One of the key roles of the official receiver is to recover assets to maximise any returns to creditors. This is covered by Section 283 of the Insolvency Act 1986, which defines asset recovery as all property belonging to or vested in the bankrupt at the commencement of the bankruptcy. Property essentially means any asset of monetary value, and it is important to note that this includes anything at the date of the order, anything pre-order, and anything which is due to the bankrupt in the near future, meaning things like monies owed for work or inheritance must all be declared to the official receiver so they can be dealt with appropriately. Whether a debtor or a creditor's petition, defining assets and asset recovery will be an important part of the individual's duty to comply with the official receiver's inquiries. The individual therefore needs to prepare the evidence of any assets, including proof of ownership and how they were purchased, will be requested throughout the bankruptcy process. In a debtor petition, such questions are covered by Section 4 of the application form, and a creditor's petition in Section 2 of the preliminary questionnaire. Next slide, please. General assets that do vest. This slide looks at some of the most common assets an individual will have at the date of the bankruptcy order. Life insurance. Policy details will be requested while the official receiver makes inquiries. The policy would vest with the trustee. If appropriate, a third-party offer could be obtained, or the bankrupt can purchase the policy for an administration fee. Cash. This refers to cash in a bank account, cash in the pocket, or any monies that are owed to the individual must all be declared. These funds could be assessed, and if required to meet a basic domestic need, this is usually evidenced through the income and expenses calculation, the official receiver would choose to release these monies in order so the bankrupt can live day to day. Computer or software. If appropriate, this can be open to a third-party offer or exempt depending if it's required for work. If there are files on the computer, the official receiver may need to take the computer or software to recover any books and records. Tools and equipment. If required for work purposes, the official receiver can exempt this or allow the asset to be purchased by a third party. If it is no longer required, as the individual has ceased trading, the official receiver could sell the asset for the benefit of the estate. Next slide, please. Sundry assets. These are assets that aren't as common in the bankruptcy proceedings, but they do still need to be dealt with. For example, pets. If there would be a realisable value, mostly if the animal was a pedigree, the official receiver would ask for a third-party offer. If no offer could be received, the official receiver can sell the animal if it would benefit the estate. Due to the nature of dealing with pets, the official receiver would treat such matters very sensitively. Jewellery. If appropriate, the official receiver would ask for a third-party offer. If no offer is received, the official receiver can sell the item if it would benefit the estate. Again, these would be treated with very sensitively. Household items. which are not required to meet a basic domestic need, can be sold, or the official receiver may request a third-party offer. Designer labelled goods, such as clothes or handbags, if these are designer goods, they would more than likely be of excessive value, and therefore the official receiver would be open to either a third-party offer or may get agents to collect such goods and sell for the benefit of the estate. Collector's items. These refer to such things as pop memorabilia and if they are of a realisable value, the official receiver would make appropriate plans to deal with this. Next slide, please. Motor vehicles. It's a common question is always, can I have a car while bankrupt? You can, but it must be declared to the official receiver so it can be dealt with appropriately. Details of the make, model, condition and location will be requested by the official receiver, and you will be asked to evidence what you require the vehicle for. If this is needed to meet a basic domestic need and is not of excessive value, this usually refers to anything that's below the £1,000 threshold, the official receiver can exempt the vehicle. For example, if it's your only way to get to work. A vehicle, however, must be roadworthy. By this, it refers to it must have a valid MOT and be taxed in order to meet exemption criteria. Only one vehicle can be exempt from a bankrupt's case. The individual will get documentation from the official receiver to state if the vehicle has been exempt. Next slide, please. In some cases, the official receiver will not accept the vehicle meets the exemption criteria required. If the vehicle is roadworthy, the official receiver will ask the individual for a third-party offer. However, if it is not roadworthy, the official receiver will instruct Car Take Back to recover the vehicle. If no third-party offer is available, but the vehicle is roadworthy and of excessive value, the official receiver will use agents to collect and sell the vehicle. If the official receiver sells a vehicle due to it being of excessive value, the individual will be given £1,000 from the sale of the vehicle to allow the individual to purchase a vehicle to meet a basic domestic need, if this is what the vehicle was originally used for. Next slide, please. Motor vehicles and finance agreements, again, are a common thing that the official receiver deals with. When a vehicle is subject to a finance agreement, inquiries would be made with the finance company, and therefore the official receiver would require an individual supply this information as part of the application or preliminary questionnaire. If arrears accrue after the date of the order, the finance company would be entitled to recover the vehicle. If the finance company became aware of the bankruptcy order, it would be up to the individual company if they were happy for the individual to remain as a customer. If the finance was more than the worth of the vehicle, the official receiver would disclaim all interest in the agreement. Next slide, please. Thank you for listening, and I'm happy to take any questions that you may have. Somebody has asked, what is viewed as excessive value for a motor vehicle? This is anything that's deemed as over £1,000. You've also got to bear in mind that a vehicle, in order for the official receiver to sell a vehicle, it would need to benefit the estate. So certain costs would also need to be cleared, but the general guidance would be £1,000. Okay, we've got another question here from somebody saying, I am aware of the guidance relating to vehicles in Chapter 27 of the operational guidance. However, there is no guidance on how insurance would be treated where a debtor is allowed to keep their vehicle. I assume the repayment would be an allowable expense for the purpose of an IPA/IPO, as it's a statutory requirement. Please could you confirm how insurance is treated where a debtor is allowed to keep their vehicle? You're exactly correct. As part of the IPA process, which Bash will discuss a little bit later, evidence would be required of the insurance agreement, but in a lot of cases it would be seen obviously as an expense, and therefore the official receiver would agree to it. Obviously, depending on different case by case, insurance could be quite high for somebody depending on, you know, if they've recently had an accident or something as well. Another question: what would happen if a person uses a vehicle in the course of their employment and they're not self-employed? By this, I think you mean if they were just an employee and they required the vehicle to go to work. Again, it would be used on a case-by-case basis. The official receiver would ask questions about how far they have to travel. If they did shift work, for example, and therefore a bus wasn't an option to them, and therefore it would be looked at in that respect to see if they did meet the exemption criteria. If as an employee you needed it to get to work and a bus wasn't available, or you couldn't walk there or get public transport, then as long as it fit the exemption criteria, the official receiver would more than likely exempt it. But again, it's on a case-by-case basis. That is all the questions we seem to have for now. Does anybody have any more? Okay, if that's all the questions for me, I will pass you over to my colleague Laura, who is going to do a presentation on family homes.
Good morning and thank you for joining us. My name is Laura Fenton and I work for the Insolvency Services Examiner in Manchester. Today I will provide an overview regarding family homes and bankruptcy proceedings. I will answer any questions you have at the end of the session. Please ask them on our message board. Next slide, please. The prospect of losing their family home without warning is what is likely to cause the most anxiety and distress for a bankrupt. Next slide, please. The term family home only has relevance when dealing with a bankruptcy. A property will be a family home where it is a dwelling house, which at the date of the bankruptcy order was the sole or principal residence of the bankrupt spouse or civil partner, or former spouse or civil partner of the bankrupt. A dwelling house is defined in the Act as including any building or part of a building which is occupied as a dwelling, and any yard, garden or outhouse belonging to the dwelling house. With this in mind, a boat is not a family home as it is not a building. A caravan could be a family home depending on the extent to which it is fixed to the ground or connected to the main services. Next slide, please. A trustee in bankruptcy will only be interested in a bankrupt's home if it is either owned completely or partly by the bankrupt. If they live in a rented property, it should remain unaffected by the bankruptcy, unless it is part rented and part owned, a shared ownership property. There are rules that deal with such family homes. The shared ownership falls as a assured tenancy. Any claim in the bankruptcy would be any equity held by the bankrupt. The family home might be sold depending on the equity. The equity is the share after any secured debts, like a mortgage, have been paid, and can be realised for the benefit of creditors. A bankrupt might have to give up their equity, legal ownership of the property if the equity is £1,000 or more. Next slide, please. There are certain restrictions on how the trustee may deal with a low-value family home. This is currently a property where the bankrupt's interest has a value of £1,000 or less. The intention of these legislative provisions is to recognise that the benefit to creditors in dealing with a low family home is often outweighed by the suffering imposed on the bankrupt and the family by the loss of the home. A bankrupt can have multiple family homes. For example, where the bankrupt lives in one property, their estranged wife lives in another, and a former divorced wife lives in a third. Next slide, please. If a property is owned solely by the bankrupt, then the bankrupt's interest in the property will vest completely in the trustee. This means that whatever the value of the property, less any mortgages or any other registered charges, will be available for a trustee to realise for the benefit of creditors. The equity and legal ownership are transferred to the trustee. This means the bankrupt cannot sell the property or claim any money from the sale. A bankruptcy restriction is added to the property's entry on land registry to say this. In a jointly owned family home, only the bankrupt's share of the equity is transferred to the trustee. A bankruptcy restriction is added to the property's entry on land registry. This means the trustee will be told of any dealings connected to the home, for example, if the bankrupt tries to sell it. Next slide, please. A trustee must do something to realise the bankrupt's interest in the family home within 3 years of the bankruptcy order, or from when the official receiver becomes aware of the property. The period can be extended by court order. If the trustee does nothing, they will lose the right to do so. No order will be made forcing the bankrupt or their family to move out of the family home in less than 12 months from the date of bankruptcy. If the trustee has not put the home up for sale within 3 years, it will be transferred back to the bankrupt. If the bankrupt is the sole homeowner and they have no spouse, then neither the 12 months nor the 3-year period will apply, so possession could be sought immediately. Next slide, please. It is not in the bankrupt's interest to do nothing and hope that the trustee forgets about the home. By doing nothing, it may give very little time to negotiate with the trustee, which may result in court proceedings and an order for possession being issued. A bankrupt may be able to stop or delay the sale of their home if, for example, the value of their equity is less than £1,000. The equity or legal title can be sold to someone else, such as a partner, or time is needed to organise somewhere for children or a partner to live. The sale can be delayed for up to 1 year. That is the end of my session. Thank you for listening. I'm happy to take any questions that you may have before we move on to the next session presented by Bashir Bashrat on income payment agreements. We have a question. If someone lives in a houseboat, can this be exempt under exempt asset rules? The houseboat, even though it wouldn't be classed as a family home, it would still vest in the bankruptcy and would be dealt with. There's a question, if a client living in a house owned by a family member wants to go bankrupt, how do you establish whether they have a beneficial interest in the property? What should we advise a client to do where they aren't sure if they have a beneficial interest? Well, first of all, they would need to establish if they had a beneficial interest. If they've been servicing a mortgage, perhaps they would maybe have an interest. If it's rented from the family member, then that would be classed as a rented property. However, on a case-by-case basis, they would need to look at the evidence of what's gone into that home, and if it vests in the bankruptcy or not. So someone's asked, can you qualify? You seem to say that if the property is sole ownership, the 3-year period does not apply. Can the OR's interest remain in place long term? That's right. So the 3-year period does not apply if it is solely owned by the bankrupt and it is the sole residence. If no one else lives at the property, then it does not apply. The 12 months does not apply either with regards to occupation. Okay, someone said, what about shared ownership property where the bankrupt only owns 25% of the property and pays rent for the rest? Okay, so it would depend on the equity, the bankrupt's equity in that shared ownership property. Obviously, they have an assured tenancy agreement with the other 75%. The 25%, the official receiver would be looking to see if there was equity that was owed, that was belonged by the bankrupt, and then that would then vest in the bankruptcy, any equity. Okay. Why is a houseboat not classed as a home? It would be classed as a home, but it would not be classed as a family home. So it would be an asset in the bankruptcy and would be looked at, but it's not classed as a family home, unless it would be a building, and a houseboat is not a building. It's not a dwelling house. Okay, how is the beneficial interest established? The examiner would look at the length of occupancy, if the bankrupt had paid the mortgage, if it's jointly owned, it would be presumed if it was jointly owned with one other, it would be presumed it was 50-50 unless there was an agreement originally when the property was purchased. Okay, so there's some vehicle. Okay, so what would the OR do in regards to overseas properties? Well, these would vest in the bankruptcy, and the bankruptcy order would stand overseas. The order may be ratified in the court of that country if need be. But we would look to deal with that. If we couldn't deal with it ourselves, then an insolvency practitioner may be appointed trustee to deal with the overseas property, but certainly it would vest in the bankruptcy. Okay, so there are some questions regarding vehicles. Beverly, do you want to have a look at those, or shall I?
I'm happy to look at them. We'll maybe do them as a add-on session at the end. Is that okay?
That makes sense.
Yep. Okay.
Okay. Okay, so what about a caravan if they live in it all year round? Okay, so if a caravan has had its wheels removed, it is connected to the mains, electricity and water supply, then that would be classed as a family home. If it is a touring caravan and not connected to the mains, then it would be classed as a caravan and would be looked at as an asset in the bankruptcy, but would not be classed as a family home. If they live in it all year round, it implies that it is possibly connected to the mains, so like I say, would be dealt with under the family home legislation. Clients get very stressed out about their bank accounts being frozen, but cash for unallowable expenditures released to them. Can you give some practical tips that we can share with clients to help them work out how to deal with this? Okay, so it's not a family home question, but I'm happy to answer it. Now, it's up to the bank whether they want to continue to have a bankrupt as a customer. Now, if the account is overdrawn, then the bank would obviously look at that, and they would be a creditor in the estate. The bank account being frozen, that is a conversation with the bankrupt and the bank. The official receiver would look at the balance on the account, and if it seemed reasonable, like you said, for expenditure, for household expenditure, then that would be released to them. Okay. Unless there's any other questions regarding family homes, I'll now hand over to Bashir to provide a session on income payment agreements. Thank you.
Thank you, Laura. My name is Bashir Bashir. I'm also an insolvency examiner working in Manchester OR. And today's session, I'll be talking about a guide to IPA and IPOs. Next slide, please. So a quick overview, we'll discuss what is an IPA, what is an IPO, how the official receiver sets up an IPA and an IPO, and a quick summary of the process. Next slide, please. So what is an IPA? Once a person has been made bankrupt, an assessment is carried out to establish if they have a surplus income beyond that needed to meet their daily living expenses. Bankruptcy legislation allows the official receiver as trustee to seek contributions to the bankruptcy estate for the surplus for a maximum of 3 years. Next slide, please. So in L1 cases, we use information from the bankruptcy application form. The income and expenditure is evidence and tested where it's reasonable to do so. For example, we've had a couple of questions, house or car insurance. Now, that would be included normally in a person's bankruptcy expenditure. We would include that. If it was a high amount, we would ask for evidence. Likewise, with HP agreements on a vehicle, the vehicle would be dealt with separately as an asset. It would either be exempt from bankruptcy, or it would then be instructed to the hire purchaser company to take the car back. Whichever way the car would go, if the bankrupt was to keep the vehicle, as long as they would evidence how much they're paying, then it would be included in the expenditure. Since 2017, the official receiver calculates any surplus using the standard financial statement. Next slide, please. So what is an income payment order? When an IPA cannot be agreed, the official receiver may decide to seek an IPO instead. An IPO can only be made and an application submitted to court by the official receiver prior to the bankrupt's discharge. An IPO cannot be more than 3 years, similar to an IPA, beginning with the date on which the order was made. Next slide, please. So the types of IPA and IPOs. The standard IPAs last for 36 months from the date the IPA agreement has been countersigned by the official receiver or deputy official receiver. The next type of IPA is what we call an NT IPA or a nil tax IPA. This only lasts until the end of the current tax year. For example, if a person was made bankrupt in June, the official receipt and there was surplus for an NT IPA, we would collect that until the end of the current tax year. So that would be 31st of March 2021. And the other type of IPA IPO is what we call a CT, a council tax IPA. This runs until the end of the current tax year. An IPA can only be applied if the bankrupt is solely responsible for the council tax or if there is a joint bankruptcy. For example, if one person in a house is bankrupt and the spouse isn't, and the bankrupt and the council tax is in joint name, the CT would not be applicable. Whereas if this is a sole person living in a property, they will be solely responsible and this council tax will be applicable. Okay, next slide, please. So once an IPA has been agreed, the official receivers, we send out what we call an IPA agreement. Once it's been signed and returned back to us, it is countersigned by the official receiver or deputy official receiver. Once it's been countersigned, it then becomes a legal binding document. A copy of the IPA agreement and covering letter is sent to the bankrupt, which provides instructions for payments of contributions under the IPA. What we also advise a person who goes bankrupt and an IPA agreement has been made is once installments start commencing, we send the IPA agreement to our long-term asset team. We also instruct our agents who monitor the IPA agreement until it is concluded. If an IPO has been made, a sealed copy of the order is placed in the bankruptcy file and the further copy is sent to the bankrupt. When a nil tax IPA is applicable, a letter is sent to HMRC enclosing a signed copy of the tax disclosure form. That's a form which is one of the forms a person signs at the beginning of the bankruptcy. Next slide, please. So, a quick summary. We make the bankrupt aware of the obligations of an IPO, of an IPA and the consequences of an IPO if a surplus has been identified. Assessment is carried out using the standard financial statement calculator. We check if nil tax and council tax elements are applicable. We send notification to HMRC regarding nil tax, so it can be applied to the tax code. Resolve any issues with the bankrupt if an IPA cannot be agreed. Finally, an IPO is to be sought if an IPA cannot be agreed. Next slide, please. Thank you very much. Are there any questions, please? Okay, so we've got a question. With regards to the standard financial statement, do you tend to query expenditure as long as it's below spending guidelines in the flexible sections? Every case is dealt with on its own individual merits. So normally, if it's within guidance, that is fine. But if someone can evidence if it's a higher amount and they can provide the evidence, then we can look into that as well. How would car on finance be dealt with a DRO? If I could take some details, please, because we don't deal with DROs in our office, so we can get further information and get back to you on that one, please. Can someone have an NT and CT IPA? Yes, they can. Someone can have a standard IPA included with an NT and a CT altogether. Okay, we've got another question. What percentage of bankruptcy cases have an IPA? Again, if you could leave your details, please, and we can go back to our team and we can get the stats for the percentage. Thank you. Okay. Is the SFS available to be reviewed by the general public? I believe there could be a copy of on our intranet. If not, that's not 100%. If not, I'll have to speak to our technical team again and see if a copy is available for the general public. Next question, how is the third party calculated by the OR? Does the OR challenge spending that is given in the SFS, for example, gym membership or high mobile phone costs? Yes, again, we ask for evidence and we would also ask for, is it more than for example, with gym membership, is it more to do not to do with a lifestyle or a medical condition as well? So again, we always, if we believe an expense is higher than the guidance amounts, we always there to ask for evidence. Okay, with the CTIPA, are clients whose income is exclusively benefits income exempt from this, or would they be required to pay their monthly council tax contribution into the bankrupt? They would normally be exempt. And next question, in what situation would nil tax be applicable? Nil tax will be applicable with anyone who's working and on a pay-as-you-earn income. So anyone who's paying tax on their salary, they would be, and if they were to go bankrupt, we could apply nil tax to their income and instruct our agents to collect the payments from there. A question from Roger: How do you handle IPAs for people on 0-hour contracts? We would ask for wage slips going over a certain period, and we understand income fluctuates. So some weeks they may do more hours, some weeks they do less. So an average would be worked out, but we would also advise them if their circumstances were to change going ahead and an income payment agreement was set up to evidence their wage slips. So payment holiday could be granted if they've not earned as much. So next question, how do you calculate a surplus if the bankrupt lives with someone else on an income? Do you calculate it on a 50-50 basis or a percentage basis in terms of their income? The SFS calculator works out the bankrupt share. Okay, we use a total expenditure, but the SFS works out the bankrupt share. Next question from Tim. I understand that IPAs cannot be ordered where their only income is means tested benefit. Is this the case? Yes. So if their income is derived solely from benefits, then an IPA would not be applicable. Next question, how do you address smoking tobacco costs and how do you consider an IPA when it is a benefit income? With the SFS calculator, it has guidance amounts. Normally, if smoking tobacco, which normally come under housekeeping costs, they're within their guidance, it is allowed, but normally Also, at the same time, it's also if there's excessive, we do have to reduce it down to guidance levels, and that's explained to the bankrupts. So a question from Sharon: how do you consider other household income and how to calculate the IPA? So with other members of the household, we would there is a section where we'd ask how much they contribute towards the bills, rent, mortgage, and their share of the costs. So that would be included. Another question: what is classed as reasonable repayments for car finance and what is excessive? With this, we normally request information from the car finance companies, and we see how much they are paying. In a lot of cases, the actual agreements are worth more than the actual car, and in that case, the cars are then uplifted by the finance companies, and any shortfalls then is added into the list of creditors for the bankruptcy. Okay, question from Meg. The SFS now has provisions for a savings contribution. Would you feel this is reasonable expenditure? I would have to go back to our technical team for this one. I'm not too sure a provision has been, I'm not aware of a provision being made, so I can't answer that question fully for you, I'm afraid. A question from Sharon: how do you consider other income into the household that is paying towards the bills? As previously mentioned, we have a section of other members of the household's contributions, and that's added in. A question from Pete: where a bankrupt is receiving private income and PIP, is the PIP income disregarded for the purpose of an IPA, or would you require evidence how this is being spent in order to establish overall disposable income? Pete, as with most IPA assessments, evidence is requested. Normally, benefits are included, but they do not count as the overall surplus if there is one. So a question from Rachel: in a 0-hour contract situation, is the bankrupt required to make up payments missed during payment holidays over the course of the IPA? Rachel, no. As long as the 0 hours are evidence, then the official receiver would allow what we call a payment holiday. Question from David: how do you treat people on furlough if they are subject to an IPA and IPO? The official receiver at the beginning of the lockdown did give a holiday period for people on furlough or whose income had dropped.
Do you want me to go back and answer some questions from previously?
Yeah, sure.
Okay, so I did the one on motor vehicles and we did get a few questions in afterwards. So it's somebody said that last year we were told that generally if a vehicle is worth below £2,000, the official receiver would not seek to realise this. Has this position changed if the limit is £1,000 for excessive vehicles? The position hasn't changed. It is £1,000 for it to meet an exemption criteria. If a vehicle fell between £1,000 and £2,000, the official receiver would look at that and see if there was any realisable funds that would come back to the estate. Obviously, if we are going to ask agents to collect a vehicle and sell a vehicle, that would be costs. So we need to make sure that in us doing that, it's going to benefit the estate, which is usually why if a vehicle falls below the £1,000 and £2,000, it means that we would look into different avenues with that, and we would make a a decision on a case-by-case basis, unfortunately. So it is still correct. Under £2,000, the official receiver probably wouldn't look to realise something just because it's not going to benefit the estate. But to meet the exemption criteria, it is the £1,000 as a rough guideline. We also got, just going back to the question which Laura briefly answered, which is about that clients get very stressed about their bank accounts being frozen, and you were looking for any practical tips. I think getting in touch with the bank sooner rather than later is always a good one. If you make the bank aware of the bankruptcy order, they can probably talk to the individual about the processes that they may follow. They may say things like they're waiting on the official receiver to make the decision. If that's the case, it's then about speaking with the examiner or someone from the official receiver's office to see what that decision has been. Practically, it is always getting in touch with the bank that the individual banks with. And then I think Bash briefly touched on this one as well, that will the car finance repayments be included in the bankruptcy reasonable expenditure? And we're looking for what is a reasonable repayment for car finance. Again, a very difficult question to answer because it is done on a case-by-case basis. I can't give you a set figure. It really depends on when the repayments are put into the income and expenses calculator. Obviously, if the calculator itself is showing that they are spending excessively in that category, then the repayment amounts would be looked at. And unfortunately, I can't give you a set figure on what that might be. There's another one here for you, Bash. I'm just going to publish it now.
Okay.
Is PIP disregarded income? Sharon would like to know.
PIP, I believe it is because it's a benefit. I saw another question was, I can't seem to find it, was how does the official receiver come to decide a third party offer? Well, we use various valuation sites to see what a vehicle or an asset is worth, and from there we then offer the third party person, see how much their offer is, worth, and then a decision is made from there. We've got another question from Fiona. Is a disability scooter valued over £1,000 going to need to be sold even though the client needs to get around? I believe in that situation, the disability scooter would be exempt.
There's a question from Elaine about how does the official receiver calculate how much a third party offer has to be? So it would be based on valuations of the asset. So the official receiver would do valuations. It's also part of the process. For example, in the topics that I did, if there was a computer, we would ask how much the individual thinks it's worth, if they've recently had it valued. We would use our agents if necessary to see the valuation, and then we would have a discussion with the individual about how much we thought it was worth and if a third party offer could be applicable. There isn't really a set figure because it depends solely on the asset, and the official receiver having discussions with the individual to come to kind of a middle ground of how much the asset would be worth.
We have another one, how back payments or disability benefits are being treated during bankruptcy. Again, this is by case. We would look into, if the money was needed for the bankrupt's daily needs, and again, so a decision will be made depending on the individual's needs.
We've got a question from Rachel about, we are seeing big delays in deductions from prepayment meters and DWP benefits stopping for debts included in a bankruptcy. I think you're talking about a particular case that the bankruptcy order was granted in April, but deductions are still being taken. Do you know what is causing this and how we can address it? I don't know what's causing it, but obviously the best thing to do is to inform the individual to contact whatever department is taking the deductions with a copy of the bankruptcy order. Sometimes if they need something internally sending, we can do that depending on the case as well. So that's probably the best practical advice, but I don't know what's causing the delay. I don't know whether you have anything to add on that one, Bash.
No, I think you've summed it up well there. I have a next question. Can a third party to pay off a bankrupt's IPO, IPA total sum in one payment? Sorry. Yes, they can, but we would need to see the evidence first of all of where the monies are coming from. Ideally, a statement from the third party to show they have the funds. Once that's been evidenced, an IPA and IPO can be paid off, but without the evidence, we wouldn't agree to it in the first instance. So there's a few questions regarding smoking. Smoking and alcohol are elements that are within the housekeeping element, and they can be evidence and used as expenditure in the income payment assessment.
There's a question, Beverly, from Simon that's asking regarding a gamekeeper client that he has that needs a vehicle valued over £2,000 for his job. Do you want to answer that?
I haven't seen that one. So just talk me through that one again, Laura, sorry.
Yeah, sorry. So Simon's put back to vehicles. My question was about a person who uses the vehicle in the course of their employment, in addition to getting to work. He is a gamekeeper and needs an vehicle. It is valued over £2,000.
Okay. So essentially, if that is a specific vehicle, it may also fall as part of tools of his trade as well, if he specifically needs that. So although it might not fit the exemption criteria, it might fit the tools of the trade criteria as well. So essentially how the official receiver would deal with that would be, we would look for valuations. We would be looking for evidence as to why it's required. We would be looking to see if there may be cheaper alternatives, but obviously in doing that, he might have made additions to that vehicle because of the type of work that he does. So all of those things would be looked into before a decision was met, but it could be a case that might form into tools of his trade rather than dealing with it as a classic motor vehicle.
Thank you, Bev. A couple of questions on IPOs. If a bankrupt has moved overseas, how the OR can confirm their income and expenditure? We would ask for bank statements and wage slips. A question from Jill, what about charitable donations? Are they disallowed for expenditure purposes? They are included, but again, it depends on the amount that someone is donating on a monthly basis. Is a copy of your allowable expenditure for an IPA available? I believe the SFS is a standard calculator used industry-wide. So I believe some organizations may have a similar type of calculator for when they do their income and expenditure assessments.
Sorry, Bash, you're mute at the minute.
Hi, there's another question regarding a loan shark. My best answer is we'd have to revert back to our official receivers technical section to see what guidance there is on that subject. Are there any more questions? Okay, if there's no more questions, I'd just like to say thank you very much for attending. I hope our sessions were insightful. Thank you for all your questions. And if there's any questions, by all means, you can email ourselves.